Hello, everyone. It's Tyler and Socrates uh, on the Lucid Investment Strategies Hyperwave channel. We will be doing once a week hyperwave analysis on a number of different current hyperwaves. Not today, however. And our schedule will be coming out shortly, so everybody will know exactly what day. We've got questions and answers, when we'll talk about traditional markets, when we'll talk about crypto. We'll always talk about crypto, particularly Bitcoin, when things are going on, and we'll probably do that in each of the broadcasts, since so many of you are interested in it. It seems like every single day there's something big happening. Bitcoin and the cryptos took a nice little bounce today, but probably are going nowhere. We'll see what the charts look like. Gold, however, looks like it's breaking out of this pattern that we've been talking about. Not only gold, but silver. In fact, silver's leading the way the last several days. Gold mining shares, silver mining shares doing very well. We'll take a look at those. Stock market pulling back. Not big, but is really struggling to break out the way gold just did. So all of a sudden we've got gold going up, the stock market neutral to flat, and the crypto market down. Whereas just not too many days ago, they were all breaking out to the upside, and we began to wonder, what the heck? Something's got to give here. Bitcoin and the cryptos gave. Now we'll see what else happens. So this will be fun today. It's one of those kind of days that you can look at charts in every couple of hours, and they're changing so much right up until the close at 4 o'clock on the traditional markets and on the gold markets. It was very difficult to tell. Gold was not up this morning. Silver was not up. Gold mining shares were not up. And then all of a sudden, a couple of hours into the trading day, they started to climb and just kept climbing and climbing. So some interesting things going on. Socrates, how are you doing today?
I'm doing well today. It's another beautiful afternoon in the Rocky Mountains. I am recovering a little bit. I had a softball game last night and took one right off the wrist. Not sure if you can see.
Wow.
Laces swelling up a little bit. That was a rough one, but it was all okay because we won in the last inning on a walk-off home run. So I can't
unbelievable.
Be upset about a little injury there. But yeah, everything's going well. These markets are moving. I'm very excited about some of the opportunities that I'm seeing, and really excited to get into some charts today.
Okay, that sounds great. I think we'll start with gold, only because it, to me, have the most significant moves. And by the way, do you guys use aluminum bats?
We do, sure enough.
Oh, no wonder. What position were you playing? Were you pitching?
I was at shortstop, and guy hit a short hopper right to me, came up and caught me right on the wrist.
Ouch. Okay, I'm going to pull up some charts. We'll start with this one because this one is very interesting to me. This is the XAU USD, and this is a daily chart. I've kind of tightened up the triangle we had drawn, and it's very difficult to draw it any other way and see that this candle today, which isn't a big number, we had a 9 back here that really didn't do anything. We did have 1 to 4 day pullback that did a little damage, but this one immediately reversed it. And then we've been pinched between this ascending bottom and a slightly descending top until today. Now, the reading on it as of right now is gold at 1425.63. And I will jump out to a weekly chart where that triangle was a little funkier, but we are on an 8 on the weekly basis, but we have cleared. This is the highest high we've had all year. And the big news is, of course, that this is this tremendous overhead resistance. And we've been saying as long as we can stay above that, and now it's been a full month, 1, 2, 3, 4, almost 5 full weeks. And we have just got a new closing low for the day. Maybe we're going to hit a 9. We will hit a 9 and then get some kind of a pullback, maybe. But this is very bullish action on the longer term. I'll pull the monthly up. And you, of course, you can't really even see this triangle. I'm going to just get rid of that and get rid of that. And that is terrific action on the monthly. It's a green 2 whose body is above the body of the green 1. We're getting right up to this risk line on both of these wicks. But on a early in the count. And that's very important to me. I haven't really taken a look at some of these longer term things. So let's just pick up the Copic curve very quickly. We bottomed in 2014 and have been working our way up, slightly down, up, slightly down, up, slightly down. I'd like to get this above the 20 mark. First target is above this old high. And but that's looking very bullish to me. We had been down all the way at -50 after the huge slide into 2014, which was really the peak of the market. Since then, we do have higher highs, higher lows here with this little intermediate, but unfortunately we've got lower highs until we can get this one a little bit higher. But overall, being mainly pessimistic for the last 2 or 3 years, except for a couple of little quick in and outs that didn't last very long. A couple of them we took some small losses, and a couple of them we took some small gains, but net hadn't been doing anything. Now all of a sudden things are perking up. A lot of people have asked us to look at silver. We are going to do that. I would go back down now to the daily, and we can see on the daily that we are living right below these stop and reverse points. Today's wicked right up to it, but didn't have enough strength to go any further. Just a series of 1s and 2s and 3s and 1s and 2s and 3s over and over again. So very difficult to tell what kind of action there is, other than the fact that it's all happening above this red line, which is approximately 1350 to 1380. And to me, that looks very bullish. We'll take a look at what Socrates has to say on that. I did want to, well, before we get away from gold, I'm going to pull up the GLDs, because this is gold bullion. However, and all they own is gold bullion, but it does trade differently, obviously, because it's an ETF in terms of prices. And one thing I did want to show you on the daily is we did take out the stop and reverse point on the daily today, and dropped it from above to below. We've got a big green 1 here above all this previous action. We did have a 9 that caused a little bit of a pullback, went right back up, and now we've broken out. You can also see the triangle here where right at the apex we did break out today. So the GLDs and the bullion itself, the XAUs, looking very good. I will go back to the XAUs and see if Socrates has got anything he wants to say about it. Do you want me to get off screen share?
Nope, you can leave that on. I'll go ahead and click on that. So yeah, basically the most important things that I am looking at, you have covered. The triangle that I am thinking is best drawn as an ascending triangle using a flat area of resistance with the close on that green 9.
Right.
So I am very much looking to buy at the close today. What I'm really wanting to see is a close above about 1427, which is the top wick of that green 2 that we have about 1, 2, 3, 4 candles ago. The next one over to the right, that one. Close above the top of that wick is what I really want to see. That would definitely provide confirmation that we're breaking through this horizontal boundary that I have drawn exactly like Tyler does there. So if it does close above 1427, I'm definitely going to be buying. If it closes above 1424, which is that horizontal area, then I'm probably going to be entering a little bit smaller and then just waiting for further confirmation to go ahead and add. There is still plenty of time here. Basically, if this does close right about where it is, there's still time to go ahead and wait for further confirmation. 2 areas of further confirmation that you could wait for would be breakthrough of the parabolic SAR on the daily chart, which will continue to accelerate downwards. That would absolutely be a great confirmation for me. Another good one would be a green 2 above a green 1 after closing above the horizontal boundary line. So right in here at 1425 to about 1430 or so, 1432, I am very interested in going ahead and entering into a leveraged long position. The stop loss that I would be using is the bottom of today's candle. When you break out of a pattern, the bottom of the breakout candle is generally going to be a very good stop loss. If we retrace below that, then it would be highly indicative of a trap. So that is an area where the stop loss would only be about 1.75% away from the price if we're entering in about 1426 or so. And that provides a really good risk reward. I would definitely be very comfortable targeting $1,600, which would be about 12.28%, something in the order of 7.5 to 1 on a risk reward basis, and also one that does seem to be a high probability setup as far as I'm concerned. Consolidating into a bullish pattern after breaking through horizontal resistance is one of the best entries that I know how to get into. And I really like this because it found support before throwing back to retest that horizontal boundary at 1375 or so. That's extra bullish. It tells us that support is really moving up and that there's a lot of demand to buy when the price is pulling back a little bit after it broke through that 1380 area. So this chart's looking about as good as anyone I've seen in a while.
Terrific. I couldn't agree more. Those following us know that on this breakout, we bought 10% into gold and gold-related items such as the GLDs, the GDXs, GDXJs. So I'd like to pull those up because they had an enormous day. Sometimes they lead, sometimes they don't lead. This is the GDX, which is the major gold miners. You see what a big candle this is. And clearly we've already taken out the stop and reverse points back on this 3. So we've got about 6 days building up to this. You could have originally drawn some sort of a triangle looking thing down here, but I agree with Socrates but the best way of looking at this is across these tops. And the low today was basically right at that point, and then it just shot up from there. The GDXs were up 4% today, $1.04 on a $26 base. So this is a very big move. I believe it's a breakout move. Now, I've shown you the longer term charts, and they're not all that great compared to what we just looked at gold. I'm going to go to a weekly. It'll be easier to see. And you can see on the weekly that it is only getting back up to this area in 2016, which is where the gold top was. So we have not even gotten back up to that level, and you can see this tremendous acceleration trying to catch up. Also note, however, on the weekly, we are getting very overextended, and a lot of the analysts that I follow are very nervous about this. The last time we were up here was this double top, which was also this big top. So I'm not trying to paint a rosier picture than we need to. Just that the momentum is very strong right now. We have taken out this very long-term top almost. Let me just see, maybe we haven't yet. That green dotted line, that's amazing. Just came right up to it. So that's the GDXs. Those are the majors, up 4% today. We are on an 8 on a weekly basis. And going back to the daily, I wanted to pull up the GDXJs, which are the junior miners. Same action, an 8, right up to this risk level that goes all the way back to these tops. So fairly exciting. We did have a 9 on a daily. We did get the pullback like in gold. Now we've got another 9 about to occur. I would assume that if we can get the 9 to be an up candle here, we'll get a 1 to 4 day pullback before going higher. Everything else, Consensio, this is the 30-week moving average, the intermediate term 7, and my 2 above it, fully bullish and looking very good. Any comments on the miners?
Yes, but first I remembered something I forgot to touch on with gold, and it applies to the miners as well. And that is that we're seeing a number of 8s, green 8s on the specifically the weekly for gold. And that could be a cause for concern when I'm looking at buying today or tomorrow. Some might prefer to wait to see what happens after we get a 9, which it looks like we should. We would need a big retrace not to. And I'm not concerned about it, and that is because of the ADX. And I often mention that the ADX is more important to me for an exhaustion sort of indicator. And right now it is just at 30.29 on my charts. Let's see. Yep, yours got it around 32 or so.
Yeah, about 32, and they're
the
crossing.
It looks like you've got the ADX and the RSI on the same chart. That's that may be confusing. See on the top left how it says RSI?
Oh, yeah, right. Let me close that one down.
All right. So yeah, that paints a little clearer picture where if the ADX is between 25 and about 40, that is very indicative of a strong trend and not an exhausted trend. So when we get a 9, I'm always looking, or an 8, I'm always looking at the ADX to see if it is showing signs of exhaustion, and it is showing that a trend just started, which is exactly what you'd expect since we just recently broke above that horizontal resistance. And therefore, this 9, I wouldn't expect much of a reaction off of it at all. Potentially not even a 1 to 4 candle correction.
Very interesting.
So that's what I'm looking at on gold spot. It makes and that makes sense to me too, because we just consolidated for about 3 to 4 weeks after a breakout. It's not like we're getting a 9 after just big rally each candle. Nope, this is coming after we did cool off and allowed for some of the other indicators to cool off a little bit. So this 9 isn't worrying me, and that does apply to the miners as well. And then the question that I had for you is seeing that big, like kind of similar triangle on the GDXs and the big candle that we just got and I guess that was, I don't know if it was on the GDXJ as well. It might have just been GDX. And then on the daily, if we just pulled that back up really quickly. So this looks very kind of similar to what we're seeing with gold, but with a big breakout candle. And seeing something like this really makes me wonder, do the gold miners tend to lead gold? Could this be a leading indicator?
The short answer to that is no, they do not, but they can, both up and down. They have not, in some time, they have been lagging for a long time, but because this appears to be a breakout on not only the miners, this is a bigger breakout than the GLDs themselves had. And there's a lot of catching up to do. So it could very well be that what we're seeing this time around at this particular point in the cycle, that we are going to see the miners actually lead the price of gold, because gold has been doing all the heavy lifting now for really the past several years on the upside. Never could really get going because the miners weren't doing anything. They wouldn't go along with it. It's a little bit like our discussion about Bitcoin versus the alts. They were correlated for a very long time. They are becoming uncorrelated. This one has been uncorrelated for a fairly long time, and now it appears it's getting correlated again. And the mining shares act towards gold the way the alts have been acting towards Bitcoin prior to this most recent action between the Bitcoin and the alts. So that's not a definitive answer or statement, but that's the way it appears to me at this point.
That's great information. Thanks.
I thought I would pull up the silver. A lot of people are asking about it, and Yahoo, you know, just gap after gap after gap. Now, silver has been lagging big against gold, much bigger than even the miners have been. But now all of a sudden it is taking off. I'm going to start on a bigger chart. Here's the monthly on silver. And you can see it's just been in this horrible downtrend since 2016 with no relief whatsoever, and are basically bouncing off of these bottoms. It's way too early to say if they're going to keep on going off of these bottoms, but we finally took out on a monthly basis all of these stop and reverse points right here. And now we've got 7 of them below the price. We came right down to it, which happened to also be where these lows are, which happened to be just slightly above where these lows are 4.5 years ago. So you can see the tremendous divergence between gold and silver, and that's why gold has moved to an all-time historic 4,000-year high relative to the price of silver. So silver's got a lot of catching up to do, but it looks like it wants to do it in a big way just recently. So my answer would be the same. Does it tend to lead or lag? Well, right, it's obviously been lagging for a long time, but it's got so much ground it can make up if people don't really understand that silver does not play a role anymore in the monetary system. And all the thousands of ads you see on television for buying all kinds of silver never talks about anything like that. So a lot of people still mix it up with a monetary metal. It is not. It's mainly an industrial and a jewelry metal. But that does not mean that it can't take an enormous run. And I would be very interested if we can get above this declining monthly long-term moving average. Let's see what the weekly looks like there. We have broken above all of those from a Consensio point of view. This is fully bullish now, with the long-term moving up as well as the intermediate and short-term. We're about to get a golden cross. This blue line is the intermediate, and this, which has been going sideways forever, is the long term, and it is crossing it under this 7 as we speak. So reason to be bullish on gold and silver. That's the SL. No, that's the SLVs we're looking at. Let's look at the silver price itself at 1596, working its way back up to 17. Notice the setup trend line up here. We wicked up to it today. We've got a green one way above a green 2, but this is a weekly chart. It's not running into the same problems that gold is running into, which gives a lot of credence to what Socrates just said about, even though we've got 9s, it doesn't seem to, we'll check it out tomorrow and the next day, but there's good reason to think that if silver keeps on moving like this, and gold has already had a 4 or 5 week hiatus going sideways and is just breaking out of it, we might not see too much of a pullback. I think Tone would disagree with that, but that would be, I agree with Socrates. That's the way it's looking to me. I want to see how long it's been since we've been up to this 16 level. Here we've tried 1, 2, 3, 4, 5 times without getting as high on a close as we did today. And the last time we were up here was, it looks like July a year ago, 1 year ago. It's formed this big W. What do you think about that W? I know you love those.
Yep, I sure do. And I was just kind of looking at that myself. It is interesting for sure. The kind of W part is a little bit too goes too high in relation to that first sell-off. I would like to see that a little bit of a smaller, like kind of catch resistance closer to that long-term moving average.
Right.
That's why I love the W so much, because it just makes so much sense with Consensio, where you get this big sell-off and Consensio is bearish, and then you get a little bounce that takes you to the bearish moving average. You want that bearish moving average to act as resistance, and right around there for the price to peter out, especially before it gets the golden cross with that medium-term moving average.
Yeah.
So right there, the price should kind of get rejected, sent back down. If it then finds support at either a horizontal support or finds a higher low, now that's given a chance for the long-term moving average to flatten out. And then it's just the next sort of rally through that long-term moving average is a really good entry for me, because now we want that golden cross to happen, and now we want to turn that long-term back up. So the idea is still there for sure, but the big W isn't quite right, because we just rally too far in that interim. We almost get back up to kind of the support area that we did. We got all the way back to the support area that we broke down from. So not ideal, but still the gist is there.
Very good. Okay.
I finished with silver. I've actually got a bit of a different perspective I could paint.
Great.
And I'll do that as quickly as we can here. But I think
let me get off of this.
Okay.
All righty.
All right, and I should be on now. Okay, so I think it's a little too early to get too excited about silver. And it is showing the first signs, but definitely it is at a major area of resistance, that this is a very, very important price point. If it can break through $16, then it should be off to the races. But that's a big if at this point. And look at this confluence of resistance along with the potential descending triangle type of formation. So right here, I would be looking, if I'm just looking at this chart, only analyzing this, I'd be thinking this is a pretty darn good place to sell. And that is because we've got horizontal resistance combined with trend resistance. And that is also happening inside a bit of a descending triangle. You can see I've got an alert there that's been set at 1377 for a while. If that broke down, I was looking at that as a great selling opportunity. So this isn't perfect, but the gist is absolutely there. Lower high, lower high, lower high. And then support, basically, you could have said that this was a descending triangle right here that kind of already broke down, is what you could say. And then you could kind of look at this area of support as another sort of descending triangle where we have horizontal support and lower highs. So this right here is a very important area for me. And the long-term moving averages on the weekly are telling me that this is absolutely a selling opportunity. When there's a significant spread between the 50 and the 200, and we get back up into this range, specifically if we retest the 200, that's a great sell signal for me. Look how well that's worked here. You might have gotten scared for a little bit, but worked like a charm. Every time we got back up in here, price has failed to stay in there for very long and has had a sharp reaction to the downside. And this is just what I like to see. Time and time again, you'll hear me talking about trend lines and moving averages. This is a big confluence of resistance. Why I love trend lines lining up with moving averages is because if one fails, then you've got the other one as a backup. So if we do break through the trend line, well, you still got to break through this 200 EMA. And when it's in a strong downtrend, we can see that that is not easy to do. So right here, not only do we have the trend line and the moving average, we've also got this horizontal. So that is an area where this is in a very crucial spot, that if we can establish support, keep support up in here, and then break through here, then we will be definitely, all things are looking good to the upside. But as it stands right now, I think it is potentially, if anything, this is a selling opportunity. But I don't think that that is the case, since everything else in the commodity in gold is looking so bullish, and this has been leading the way. Instead of looking at this as a selling opportunity, instead I would say this is no trade zone and time to wait for further confirmation. Wait for the 50 and 200 to get some golden cross on the shorter time frames. For example, right here, it looks like it's coming in on the daily. It will here very soon, it looks like, but look how far the price is extended. This is not a buy signal. If we get a golden cross with the price this far above, we would want to wait for a correction, especially if we're at a confluence of resistance. So this is one that I do want to eventually see gold take off and silver get left behind, because like Tyler said, silver is no longer used as money, nor does it need to be. And therefore, I would think that the market's going to figure that out sooner or later, and that eventually gold is going to be able to leave it behind. And I'm very hopeful that happens. That would be a good sign, and would tell me potentially that there's more than anything else that central banks are accumulating gold and not silver, and therefore there's significantly more demand there. So taking a look at the gold to silver ratio, this is a chart that's very, very important to me, and something that I'll be paying very close attention to. As long as gold can maintain this channel and keep supporting this bull channel, then it is going to be pointing towards gold leaving silver behind. If this does break down, and to take that one step further, as long as this is intact, I'm going to prefer to be long gold than silver. As long as gold is bullish versus silver, I'm going to prefer to be long gold than silver. And then if this does break down, this trend line here, this bottom trend line, at that point, I would definitely be interested in longing silver and potentially covering some of the gold longs. But that's a long way to go. One thing that is very interesting is that we are getting the first signs. Weekly parabolic SAR did break down. Very important. Tell me medium-term trend is shifting. And let's go ahead and see what the moving averages say on the 4-hour. They are tending to agree. It looks like the price is in a good spot to pull up and into a death cross. So it does look like silver is in a position to gain back some value against gold. However, as long as it remains below $16, I am going to be skeptical that it will be able to gain any value back in a sustainable fashion in terms of actually breaking down that channel, as long as we are below this area of resistance.
Excellent. Great points. That's terrific. I am just going to very quickly pull up some mining shares. I have not looked at them today, just didn't have time. I know they must have done well because of what the GDX and GDXJs did. But let's just take a quick look here. This first one is Anglo Gold on an 8 in a very strong uptrend. All moving averages looking good. Stop and reverse below. We're on a 40 on the ADX. This is the weekly. I'm going to just go through these quickly to get an idea. We did this not too long ago, and we saw huge spreads in all of these miners. Now all of a sudden, now here's a 9 on Kirkland Lake Gold that turned out to be nothing. the one right after the 9, and then a green 2 above a green 1 above the 9. So that might be some leading indicator that maybe these gold 9 are not going to be as powerful as we thought. This is Newmont, the big, one of the biggest in the world. It is on a 9, so that'll be interesting to follow.
And just quickly on that chart, it is my understanding that if you do have a 9 that does break through that TDST level, then
right
you should expect more upside. And on this chart, again, I wouldn't expect a 1 to 4 candle pullback, because you wouldn't want the price to fall back below that TDST level, even on a like a wicking basis. And we do see how that current candle came right back down to there to kind of test it, and now is getting a good response. So that leaves really no room for a 1 to 4 candle correction if this is going to continue to the upside, which we would expect since this 9 count has exceeded that TDST level.
Great point. Agnico Eagle on an 8. Everything else looks the same as all of the others we're looking at. Eldorado Gold on an 8. Took out the risk line, now is way up here, which means that way back here we've got all kinds of action. Amazing. Back into late 2017 since we've been up to these levels. There's the GLDs. We've looked at those. This is Alamos Gold. It's just a little company on an 8, 10. I haven't been looking. Let me just see what we've got on the countdown. 7. I don't see anything here on AEM. Newmont, looks like we've just got a 1 there. 2, no, we got an 11. We had an aggressive 13. We're on a 12 here. We had a sequential 13 on that 9, and it just blew right through it.
Took them all.
That's interesting action.
And could you pull up the ADX on that chart?
Which one were we just looking at? AGI?
Kirkland.
Yeah.
So right, like there, the TD sequential is screaming at us that this thing is exhausted, but the ADX is fully disagreeing, saying that this is a prime strong trend, prime territory for continuation. So just a perfect example of why I love the ADX so much and think that those can be used so well together. When you see that 9, take a look at the ADX, and if it is between 20 and 35 or 40, then at most a 1 to 4 candle correction is expected in my mind, and generally not even that much. Generally, the next count will take off when we're in that really strong trending territory.
Very cool. That's great. Here's Kinross on an 8. We're up above 20 on the ADX. No countdown. This is called McEwen Mining. It's just a $1.50 stock. It's on a 7. It's one of the big laggers we looked at before. IM Gold on a 7. Took out the setup trend line. It's working on this old top. We're getting a cross under the 7. Very, very interesting action. across a wide variety of ways of looking at the precious metals market. But fascinating about silver, a little bit higher, 16 up to 17. And we'll see if the strength that it's had is doing something. We've got a C13 on this 8. Everything else looks pretty good except the ADX, which is struggling down at the 20 level and is very flat. That is called Sandstorm Gold, SAND.
And that's another illustration of why I love that ADX so much. When it's under 20, it's telling you that you're in a trendless market and that you shouldn't be trading in this market until the ADX at least crosses 20, and some will use 25. So if you could just have the chart included again there, we notice how over this past time frame that has been really choppy. Since February, we haven't gone anywhere. It's been a flat market. And now if we do break through that horizontal resistance, which we are testing right now at about $5.90 to $6, if we do break through there, then that ADX will cross 20 almost at the same time. The ADX has an uncanny ability to notice when the price really is breaking through a range, and therefore a trend should be expected to start. So even if it is on a green 9 that we do break through that horizontal resistance, that wouldn't worry me even a little bit, because we're just now set up to trend since we're breaking out of a range.
Very interesting. That's great stuff. Everybody should play all of this back. This kind of analysis works on all asset classes. We're looking at one that I think is a very important asset class because of the macro picture, which is the precious metals that haven't done anything for 5 years. All of a sudden, things are happening. I'm going to get off of this.
Before you do,
and
one thing to comment on that chart, because it really is beautiful. Look at the buy signal that we kind of got as that red 8 was happening. We're pulling back that one that has an arrow that tells us that was a 9 at some point, and we can tell that it was as it was down there, and it came and it touched that long-term moving average, kissed it, and then if you were looking at that as a buy signal off of what was at the time a 9, testing a bullish long-term moving average, that's just a perfect buy signal, and look at how well it worked out. So I love that.
It sure did. And then just kept working its way higher. Not a lot higher, but turned all the moving averages around, the intermediate and the short. So, yeah, that's a great point.
And still almost 20%. So it is a significant move.
Sequential and consensio and stop and reverse points and ADX all in one chart. Very interesting. Okay.
Those are all my favorites.
Okay, so where did that baby go? There she is. Let's bring that back up. Stop screen sharing. Okay, why don't we take a look at crypto? Because we had some people pretty excited this morning that things were bouncing. Litecoin bounced pretty nicely. Bitcoin struggled in the morning, then all of a sudden took off kind of about the same time gold did for some strange reason. I wonder if testimony today had anything to do with that. Do you want to pull up some charts?
I would love to. Okay, sharing my screen now, and we'll take a look at starting from where we left off yesterday. I was looking at this bearish channel and expecting price to find some support. I had said above 9,300 and then a relief rally to retest the top of this channel was what I was calling for and expecting, and was also looking at not only being at the bottom of a bearish channel, but also testing the bottom of a bullish channel. So this is like something that I really like to see in terms of, if you're at the bottom of a bear channel, that means that even the bears are viewing this as oversold. And even people who are bearish are likely looking to take profit. If we are, taking a look at this action here, and you were shorting it in here like I was, and the price was down in here, then you're looking at this as oversold, even if you're bearish. And then if you are bullish, you're also looking at this as oversold and an area of support. So at the bottom of a bear channel and the bottom of at least testing a bullish trend line, that tells me that bulls are viewing this as buying opportunities, and bears are likely viewing this as an opportunity to take some profit. And therefore, a relief rally should be expected. And price did briefly break down below 93, but notice how it never violated my channel. So how I like to do this here is sometimes I'll use multiple trend lines when it is a little bit disputable where it should be drawn. And that's the biggest problem that most people have with trend lines, is that they can be adjusted, and a lot of people don't like that. One of the ways that I like to handle that situation is kind of drawing two trend lines. And when I do that, I'll generally draw one in a different color, or I'll use a dotted line. And what it shows me is where price will tend to wick down to, but fail to close. So this zone right here, let me get that back going. This zone between this red line here and the dotted red line below it, notice how when the price gets down in there, it will wick but not close. What happened here? And then that's exactly what we got when it did go below 93 and fell below this channel support. It failed to close. It wicked down and closed back above. This candle right here certainly got very close to closing, but I do see how it's missing a little bit of that wick. I could adjust that down just slightly, and now it closed basically right on that. And so we see a wick down and a close there, and that was, even though we did fall below 93, which was my original target of support, I was still okay with it because we were keeping the bottom of this bear channel intact. And I was looking at wanting to see a daily close above this bull trend line here, which was waiting about 9,600 or so. So I was wanting to see that. This was getting a little hairy and really starting to look like it might not get any sort of bounce. Somebody tweeted at me and said that the daily close wasn't above this bull trend line. Does that mean we're no longer going to get a relief rally? And I never speak in certain terms, saying that for sure we will or for sure we won't. But I did say that if it is going to happen, it needs to happen very soon. Because if there is any follow through from this close on the daily, if we did get follow through from that over the following 6 to 12 hours, then we would really rip down through that support, and there wouldn't be, in my mind, really much support at all for another 10% leg down or so. So I was starting to get a little nervous, and did say that if this is going to rally, it needs to happen soon. But I was still expecting it because this bottom of this bear channel was staying intact. And notice how often when you do finally get this rally, it will be after it really looks like the breakdown happened. And this candle really did have a lot of signs pointing towards no relief rally. These candles were showing support. We've got reversal candle. Now we've got a green candle gaining back some. Now this candle closes below everything, closes below this low, and it very much threatened this bottom of this channel. And really, this was the do or die area. If this thing had any follow through, then we would have broken all this down and been ready for a sharp move to the downside. And you've heard me before talking about timing volatility, and that's something that I think a lot about and want to be very aware of when big moves are expected to happen. And right in here is absolutely where I was expecting a big move to happen one way or the other. When I'm looking at timing volatility, I'm not thinking about direction. I'm just thinking about if this thing is ready to make a move. And right here, if this had any follow through, I was seeing a big move to the downside. But if it didn't have any follow through, then that means that it should get a sharp reaction to the upside, exactly what we got with a bullish engulfing candle. When you're looking at engulfing candles, you use the bodies, not the wicks. So this is engulfing, and that leads to more upside 70% of the time, according to Thomas Bulkowski. So after this close, I was really interested in what was going to happen up in here. In the tweet that I sent out, I said if we do get back up to 99 to 10,200, it should provide a very attractive selling opportunity. This candle did get up to 9,900 and wicked back down, is now flirting with this trend line here. So this 99 was the minimum that I wanted to see this return to. That is about the middle of this channel, which if it was a pitchfork, that would be the median. And after testing the bottom, you'd expect at the minimum a return to the middle, similar to how the Bollinger Band works. So at the minimum, relief rally has happened. And I don't necessarily think that we need to see more upside, but there still is some room for it. And again, we're in an area where some volatility is absolutely to be expected. 50 and 200 EMAs on the 4-hour chart are postured for a death cross that should happen in the next 24 to 48 hours. And ideally, you would want to get a bounce, a pull right up and into that death cross, which is in confluence with the top of this channel. That's why I thought that it would be such an attractive selling opportunity right here. But that may not happen. If this was the top and we turn around from here and continue lower, then these will cross with the price too far away to really provide much of a signal. But for the people that were really kind of freaking out yesterday as price was grinding down to 91, 92, 93. Remember what you were feeling yesterday, and remember how I reiterate not to sell this action, but to wait for the price to come to you. And now that the price has come to you, this is where it is extremely important not to drop the ball and hope for 10,200. Now that the price has bounced, you want to be very, very careful about if yesterday you were wanting to sell at 93 and today you don't want to sell at 97. That is something that you need to pay very close attention to and think a lot about. And why I was pointing out this action on Twitter yesterday was to help people that were wanting to sell here to wait when this happens. Wait to sell here until you at least get some consolidation and preferably some sort of relief rally. And the only risk there is if you wait for this and then you decide not to sell because you are now convinced that it's going higher and that the bottom is in. This death cross with the 50 and 200 EMAs combined with the recent breakdown of the weekly parabolic SAR is telling me that the medium-term trend is bearish And therefore, if anything, I want short exposure. And if I'm not comfortable with the short exposure, then I would just want to be waiting very, very patiently to buy back in. Because when we're just getting the first signs of the medium-term trend turning, that tells us that it could be months. Remember, short-term trend is days to weeks. Medium-term trend is weeks to months. So this thing could have a counter trend correction to the downside that lasts months. And therefore, we either want to be short that market or we want to be very, very patiently waiting on re-entries. And that is my thoughts on that.
Excellent. That's really great stuff. Very interesting how those last two candles are just kind of dojing right on the uptrend line without making any further progress. So it'll be very interesting to see tonight and tomorrow morning what happens here. That's terrific stuff. And how about on the alts? What is it looking like to you now?
Yeah, absolutely. Let's take a look at some of those, see what we got. Did send out a tweet here recently about ETH BTC, showing my sell zones that I have set up to add to my short. So I did get filled on a order this morning to go ahead and add to the short position that I had originally established around 0.025. You've heard me talking about wanting to add aggressively on any bounces, and that's what we're getting here. So I've got two trend lines drawn, and notice how it's kind of like an upside down hyperwave almost, in the sense that there's like some horizontal consolidation, and then once it gets moving, it really gains some momentum such that it just, these trend lines accelerate. We had this first one here, and now I think we're getting a second accelerating trend line to the downside. And that is right in line with the 50 EMA on the 4-hour chart. So right here was my first sell zone. And so far that's looking good. But if that does go ahead and break through this trend line, then I will be looking to add right about here, and that would be absolutely ideal. One that's I'm thinking would almost be such a good setup that it's one that might not happen. And I almost hope that it won't happen because I've already got so much short exposure. So notice prior horizontal support here turned into resistance here, lines up perfectly with this trend line here. And then the 200 EMA is slithering right on top. If we do manage to break above that, I would expect that 200 EMA to be huge resistance, and that might even be a third sell zone. So right here is where I am looking at adding to my positions. And now that we are kind of seeing a bit of a reversal candle come off of that first sell zone, I have drawn in this bullish trend line, which is important to me. If we do, and notice how that that kind of reversal candle found support, it came back right down to this trend line, which also was right in line with the 50 EMA on the 4-hour chart. So as long as this trend line is intact, I'm not thinking that this was the top. If this trend line does break down, then I will no longer think that this is going to happen. But it is starting to look like this is fairly likely as price has moved up and found support here. Now it is starting to roll up these moving averages on the shorter time frames, which says that there's still potentially some room to go. We just got the golden cross on the 15-minute. And the 30-minute is has flattened out the long term and found support at the 50. So it does look like that there's definitely a chance we can get up here. And the real reason why I'm not necessarily thinking that's going to happen is because I've really noticed how Ethereum versus Bitcoin has very much been following Ripple versus Bitcoin. And in the sense that it had this enormous pattern, right, where we have horizontal support right in here that had held up forever, and kind of formed this descending triangle with lower highs, and then what has really been happening over the last few, let's say, months since this year started is this kind of upside down hyperwave, which if a hyperwave is the fastest way to go up, it kind of makes sense that an upside down hyperwave is the fastest way to go down. So notice how we are getting these accelerating trend lines that have provided just tremendous selling opportunities anytime. And I'm glad that we pulled this up because that is interesting to see that looks like it's breaking through this one right now. But anyways, notice how anytime that as the prices progressed, we have accelerated the angle at which this thing is selling off. At first, it was selling off at this angle, and then it broke down this horizontal support and started selling off at this angle. And then it broke down this horizontal support and started selling off at this angle, like basically a phase 4 type of move after kind of having this horizontal action over here. So this chart is a big reason why I have been confident in the Ethereum sell-off, is because it has been mirroring this action, but lagging it slightly. So this is where I have been keeping my eye on these accelerating trend lines on Ripple and thinking that we should see the same thing in Ethereum, and we kind of have. So it will be interesting to see if this daily is able to break above this trend line. Notice every time that these trend lines have been tested, sometimes it's managed to wick above, but anytime you were in a position to sell there, you basically immediately started turning a profit, and it started going in your favor in a big way very quickly anytime it came up to these trend lines. So that is why I am really interested in selling both of these trend lines here, along with the normal Consensio sort of strategy that I employ, selling this 50 EMA here, and then adding, if we do get up to the 200 EMA there. So definitely going to be paying very, very close attention to ETH BTC over this next week, and we'll be hoping that this was it and it turns around from here. But if not, then hopefully we get that nice wicking action off of here, and hopefully I'll be able to get a little bit of that. And that is pretty much everything I'm seeing there.
Terrific. Great stuff. We've gone about an hour and 10 minutes. I think we'll just quickly pull up a couple of index charts in the stock market. Nothing big today, but it has been struggling in kind of a consolidation right about where it should, but instead of breaking up out of that consolidation, it's slowly pulling back again. So what I'd like to do is just quickly pull this guy up, and we'll just look at a couple of things.
Are you pulling a chart up?
Yeah.
Okay.
You can see that one?
Yep.
Okay, I'm going to go to indexes and just quickly pull up the S&P. 19-point drop, which is a little more than 0.5%, but coming at a bad time, meaning everything's still looking great. This is a weekly. We got 5 stop and reverses coming up. We've ignored all of these sell signals up to this point, an S and A and a C 13s, but they take their toll after a while, or they can. We're only on a green 6. We're fully bullish, but this is not good action. We need to turn around fairly quickly. All of this for the last 3 weeks has been taking place above these highs, above that 7, above this 2, 3, and 4. We have taken out, set up trend lines. We're sitting on the top of this very long, old dotted line that is thrown on at old highs, but I'm not sure where that one is coming from. Do you know where that one's coming from? Because we haven't been this high before.
I'm sorry, which one is coming from?
This one.
That is from the current price. It'll have a red line across the chart for the current price at 29.84.
29.84. Okay, great. So that's the S&P. The Dow, same sort of a deal. We're on a green 7, everything else up. So we've still got some time to go before something's going to happen. I'll go back and pull these up if you want, or you can pull your own up. We're on a 5 on the NASDAQ 100, and we are on a 5 on the NASDAQ composite. And all of these are at new high ranges. And all of Consensio is positive, and the stop and reverses are positive, and we are not overbought in any sense on things like the ADXs. On a weekly basis, we've turned up after this kind of jagged action over the last couple of years. So I'm not issuing any kind of a warning here. We are still fully invested in this market. But I just wanted to point out that with gold and cryptos bouncing today, all of a sudden we had a little bit of a pause to consolidate in today's action. Anything you see on these indexes?
Yeah, I can pull up an S&P chart. There's just kind of something that I can go through that I think is important.
This is the weekly.
Yeah, I guess I'll pull up my own chart.
Okay, good. Let me pull this one down.
All right, and I will go ahead and pull this guy up real quick. So just a bit of a good lesson for viewers to kind of learn here is, sometimes you manage trades well, and sometimes you manage them poorly. Both generally provide learning opportunities. And this is a trade that I have been in for a little bit, and I am really happy with how I've been managing it. So I did want to just touch on a really important concept for me really quickly, and that is when a position moves in your favor, how important it is to ensure at least a break-even trade and preferably some profit. And I was entering into this after this gap up and these wicks here. This is where I was very interested in buying and did go ahead and enter. And then I was using this as my stop loss, recent swing low. And then right here on this candle, right here in these two candles here, you can go back and listen to our vlogs. I talked about how this is just a tremendous close here, a great breakout. We finally busted through 3,000 as we had struggled to do it back in here, had some stutter steps, and finally, boom, we break through and get this great bullish candle that closes at the top of its range up at 3,013, new all-time highs. Everything is looking good. I mean, the TD sequential is on a 2 above a 1. and then a 3 above a 2. Everything is showing that we just broke through major horizontal resistance, psychological level, and we're not overbought according to a lot of these indicators. So I said that I absolutely am expecting more upside, but what I'm doing is trimming my position and taking some profit, because often after these big moves, when you really do expect more upside, is when you will get that reversal kind of out of nowhere. And that's when it can be too late to go ahead and take the profit that was on the table. So right here, I closed 33% of my position. I don't remember the exact number, but it was right about 3010, 3013 or so. So it covered 33% of my position here, in profit significantly. From this area here, it was a leverage long. So now I closed 33% and I moved this stop loss to break even. So now I'm not worried at all about this action that's happening, because I know that it can't cost me any money. If it triggers my stop loss, who cares? I'm out and I'm in money. I made money because I trimmed up here. If it doesn't trigger my stop loss, great. Then it should continue up to the upside in a big way. Whereas if I didn't trim here, which I only had about a day to do it, I wouldn't have wanted to trim after this big pullback. If I didn't do it up in here, then I really would be worried right here. I'd be thinking, well, shoot, do I leave my stop loss down here, which is where I think it would be safe, or do I move it to break even, which I think it's very much in danger of getting triggered, but at least then I wouldn't be risking anything. That would be a big problem. Like I said, don't always manage trades well. Everybody will have good ones and bad ones, and this was one that is good, that is potentially a good learning experience for people that even when you are really expecting more to the upside, that is generally when it's a really good time to go ahead and take a little bit off of the table and adjust the stop loss such that you're guaranteeing yourself a little bit of profit. And when this happens, now you're not really worried at all. And in fact, you can be thinking of, is this an area to buy the dip? And it really I'm inclined to think that it would be. So just wanted to go over that real quickly and then just kind of show this channel that I'm looking at. I would like to see us create a higher low above this Williams fractal here. If that doesn't happen, potentially it'll come down and a lot of people will have their stop losses right there. If we can come down and find support at this trend line, then I would absolutely be staying very bullish. If this trend line does break down, then I'm going to be reevaluating.
Excellent. Yeah, that is a great lesson. Luckily, I don't trade that way anymore. I'm in for the intermediate and long-term trends, and but most people aren't. You need a lot of time to be able to study these charts if you're going to be trading off the 4-hour or the 1 day. And I don't have that kind of time, so I've adjusted over the years how I make my decisions. But what you're learning from Socrates is exactly what you need to know so you can control your emotions when things begin to get out of hand for you personally. And what I mean by that is by knowing what the plan is and taking action in places that you cannot stand, either financially or emotionally, to go above or below without it really affecting the rest of your life. You know, how you are interacting with family, how you are interacting with friends, how you're interacting with yourself, punishing yourself for things that you're doing. You want to start taking smaller and smaller positions and longer time frames where you can find out exactly who you are and how you're going to approach these things. All of these rules you can do on the minute charts, the 5-minute charts, the 10, the 30, the hour, the 4 hours. You can move it to the dailies, 3 days. I'm very intrigued with some of the 8-day stuff that some people have been working on. I've been looking at a lot of things right above the 1 week level, or you can go from the weekly to the monthly, and all of the techniques still work. So you have to decide who you are and how you want to be using these tools. You don't use big 5-pound sledgehammers to put thumbtacks in the wall. You know, each tool can be used very precisely for who you are and what you're trying to achieve. That was a great lesson, Socrates. I really appreciate it. And I think that's about it for today. We've looked at the gold and silver market, gold mining shares, taking a look at what might be going on with Bitcoin and the cryptos, and the little pullback that we've seen so far today in the stock market. All very interesting markets. So thank you very much. And thank you, Socrates. And we will take a look. Tomorrow is Thursday, so we're getting close to these weeklies, and we will pick those up on Friday. Anything else, Socrates?
Nope, it was just a pleasure to look at some charts with you. I think that we've got some really exciting action that we're seeing across the board, and the S&P, Bitcoin, gold, silver, altcoins, I mean, you name it, this stuff is moving. And that is when it is very exciting to be analyzing on a regular basis, because there is plenty to talk about. So certainly enjoyed it today. And just to mention real quickly, we do have a webinar coming up, not this Friday, but the next, and it will be intermediate and advanced Consensio. We will be teaching exactly how we implement Consensio to identify long-term trends and reversals, as well as to signal entries and to manage stop losses. I have a unique take on that, which is based on a shorter-term swing trading perspective, and Tyler has been using it throughout his career for capitalizing on long-term trends and investing into major moves and then fully getting out before those markets reverse. And we will be sharing all of that with you guys a week from Friday. So anybody that is interested to learn more about how we use Consensio to beat the markets, please attend the webinar and go to Lucid Investment Strategies to sign up. It is $150 and should be well worth every penny. If you can use that information to make one profitable trade, you'll get your money right back. So we'll be very excited. We'll be working hard over the next week to get that ready for everyone. And until then, we will be seeing everybody tomorrow.
Terrific. Great. Thank you, everybody. Thank you, Socrates.